Everyone keeps telling you Bitcoin is the future of money, digital gold, a hedge against inflation, the system that's going to replace banks forever. But what if none of that is actually true? What if the entire thing only works as long as someone new is willing to buy in? Today, I'm putting Bitcoin through a simple test, the same test economists use to define what money actually is. And the results might surprise you. I'm Dollar Duck, and this channel is about making money make sense. No hype, no jargon, just the real numbers behind the trends everyone's talking about. And today, we're talking about Bitcoin. Not whether it'll go up or down tomorrow, that's a guessing game. We're asking something bigger. Does Bitcoin actually work the way money is supposed to work? Before we judge Bitcoin, we need a standard to judge it by. Economists generally agree that real money needs to do three things. 1. It has to work as a medium of exchange, meaning people can actually use it to pay for stuff. 2. It needs to be a store of value, something that holds its worth over time. And 3, it needs to function as a unit of account, meaning we can price things in it and compare value easily. Let's run Bitcoin through all three. First test, can you actually use Bitcoin to pay for things quickly and cheaply? Not really. The Bitcoin network handles somewhere around 500,000 transactions a day. That sounds like a lot until you compare it to Visa, which processes tens of thousands of transactions every single second. At that rate, Visa could clear an entire day's worth of Bitcoin transactions in under 10 seconds. And it's not just slow, it's expensive to run. Studies estimate a single Bitcoin transaction can use roughly as much electricity as an average household uses in over a month. That's an enormous amount of energy just to move digital money from one wallet to another. When something is this slow and this resource heavy, it's not surprising most people aren't using it to buy their morning coffee. Second test, can you hold Bitcoin and trust that it'll still be worth roughly the same tomorrow? This is where the digital gold argument comes in, the idea that because Bitcoin has a limited supply, it should hold value the way gold does. But there's a problem. Gold doesn't swing 20% in a month. Bitcoin does. Regularly. An asset that volatile isn't something businesses can price their products in or families can safely park their savings in. There's a second issue too. Ownership concentration. A relatively small percentage of wallets control the overwhelming majority of all Bitcoin in existence. When ownership is that concentrated, a handful of large holders can move the price dramatically just by buying or selling. That's not exactly the stable foundation you'd want for something meant to protect your wealth. Third test. Do people actually price things in Bitcoin? Even businesses that technically accept Bitcoin don't set their prices in it. They price everything in dollars and only convert to Bitcoin at the exact moment of payment. That means Bitcoin isn't really functioning as a pricing standard. It's just passing through the transaction for a few seconds before converting back to normal currency. That's not what a unit of account is supposed to look like. Now, if you're a Bitcoin believer, I already know what you're thinking. It just hasn't had a real chance yet. Except it has. In 2021, El Salvador made Bitcoin legal tender, the first country in the world to do it. They built a national wallet, required businesses to accept it, and even gave every citizen $30 in free Bitcoin just to get people using it. This was the real test. A full country government-backed financial incentive included. So what happened? According to IMF data, Bitcoin ended up accounting for less than 2% of the country's remittances, even though sending money across borders without banks was supposed to be Bitcoin's signature use case. And research from economists tracking the rollout found that a majority of people who downloaded the government wallet only did it to claim the free $30, then never used it again. Today, most of the country's population reportedly views the whole Bitcoin experiment as a failure, and most don't want more public money spent supporting it. When you give people every possible incentive to use something as real money, and they still don't, that tells you something important. So if Bitcoin isn't working well as a medium of exchange, a store of value, or a unit of account, where does its price actually come from? This is where we get to something economists call the greater fool theory. It's the idea that an asset's price doesn't need to be backed by real usage or cash flow. It just needs someone willing to pay more for it later than you did. Bitcoin doesn't pay dividends. It doesn't produce anything. It doesn't generate cash flow the way a business does. Its price moves almost entirely based on belief, the belief that more buyers will show up tomorrow. That belief creates demand. Demand pushes the price up, and the rising price attracts even more buyers. It's a cycle that works great, right up until new buyers stop showing up. And this is exactly why the story around Bitcoin keeps shifting. First, it was peer-to-peer digital cash. When that didn't take off, it became digital gold. When volatility made that argument shaky too, it became an inflation hedge. Every time one narrative fails to hold up under scrutiny, a new one takes its place, because the entire system depends on new buyers continuing to believe in something. None of this means Bitcoin is going to zero tomorrow, or that you should panic if you already own some. But it does mean you should be honest with yourself about what you're actually holding. This isn't digital cash you can spend easily. It isn't a stable store of value, and it isn't how anyone prices real goods. What it is a speculative asset, and speculative assets can be part of a portfolio, but they shouldn't be treated as your financial safety net. So next time someone tells you Bitcoin is the future of money, ask them to walk you through the 3 tests we just covered. Chances are the story will start to shift again. If this broke things down for you, hit subscribe. I put out a new video every week helping you see past the hype and understand where your money's actually going. I'm Dollar Duck. See you in the next one.